So the way people trade effectively and they get the correct bias and trade in the correct direction is by using top-down analysis. What this means is we're starting from the highest time frames, the daily, the weekly, the monthly, and we're just working our way down to the smaller time frames to see the intricacies of what's happening day by day. So there's a lot of confusion amongst new traders and even people looking to invest on like what time frames should be used for what. So the correct answer is every time frame is important and you got to use all of them accordingly. But you tend to find people that are new to like investing or new to trading, they don't know which one to start on. Oftentimes they'll look at an instrument on, say, a crypto exchange and automatically you see like a daily time frame or a weekly or a monthly. I'm just gonna create this video to elaborate on what the time frames are used for and how you can implement them accordingly. So we're here on TradingView. We're just looking at euro dollar. We're starting on the monthly here. I want to walk you guys through each time frame and what they're generally used for when it comes to viewing an instrument on TradingView. So you can look at anything on TradingView. We're looking at a Forex pair right now. You can look at gold, you can look at cryptos, you can look at stocks, right? Doesn't really matter what you look at. Everything is viewed in terms of time versus price, right? So looking at the monthly on euro dollar, you can see that each candle represents a month's worth of time that has passed, okay? So for the current monthly candle, we have 24 days and 2 hours left until it's completely filled. That means that this candle can push all the way up past this high or all the way down past this low. We don't know. We still got 24 days until it develops, right? I quickly want to just make a reference to my trading styles video on my channel. If you guys haven't seen it already, take a look. I cover in depth the 3 main styles of trading and how each time frame goes with which, but I'm going to run through it briefly in this video. I want you guys to understand that it's super important, no matter which time frame you look at, to always consider how much time is left in the candle until it closes, right? If we drop to a daily here on euro dollar, this is a bullish daily candle. It pushed up from this rejection on this candle, right? And because there's an hour and 48 minutes, that tells us that we have 2 hours to know whether or not this daily candle will take out this high or not, okay? So paying attention to when a candle closes versus when it just started to form is super important, especially on lower time frames when you're day trading, okay? So the way people trade effectively and they get the correct bias and trade in the correct direction is by using top-down analysis. What this means is we're starting from the highest time frames, the daily, the weekly, the monthly, and we're just working our way down to the smaller time frames to see the intricacies of what's happening day by day. So if we take a look at euro dollar here, we're on the daily time frame. If we drop to the 4 hour, we get more information, right? So every candle that forms represents a 4 hour time period and what change in price has occurred. So as you can see on euro dollar, this is our range that we're stuck in that we highlighted from the higher time frame. And again, we're stuck between another range here, here and here. We're basically stuck between the previous 4 hour candle, okay? So this new 4 hour candle has an hour and 47 minutes left until it's fully formed. Anything can happen between now and then, right? So the lower we go in time frames, the more information we get. Every candle represents the time frame that you're looking at. We could drop to the 1 hour, get more information. So each candle here represents 1 hour on this time frame. So you can see every time frame you go down, you get more information on how price has fluctuated given that interval of time, right? So what I could say is, me personally, with my trading, I like to trade off the 1 hour and sometimes the 30-minute. That's what works best for me. It's more of an intraday swing style. People that are swing traders tend to trade on the 4 hour and the daily. Again, I covered this in my video if you guys want to take a look. But looking at the 1 hour here, we can see that we're stuck between this range. And again, this is what every candle represents. 1 hour time intervals, okay? So it's important that we take a look at what's happening from the higher time frames down because it gives us an overall sense of where price is going to go next, okay? From the highest time frame perspective, we're clearly bullish. We're above our 200 EMA and we're just making higher highs and higher lows. You know, until this low here gets ran, my assumption is we're going to continue pushing up until we take out this high, right? It's just bullish market structure, very simple stuff. So on the daily, we have that overall bias. We can mark these levels out. And the lower you go in time frames, the more you can see day by day opportunities to get into the market, right? So starting on Monday with euro dollar, we had a push up during Asia, continuation during London, retest during New York, a failed push during Asia, and then towards the end of Asia and London, we pushed higher, dropped down towards the end of London, beginning of New York, pushed back up again, right? So we're creating that bullish market structure that we're expecting based on the higher time frame. And if you go even lower in time frames, you can see even more information. So usually these lower time frames, like the 15-minute, the 5-minute, they're used to get more tighter stop loss entries, right? Just using this as a demand, you could see your potential risk to reward would be much greater than if you were just trading on the higher time frames. But that also means there's a higher likelihood that your trade could get stopped out, right? So the tighter your stop loss, the less likely the trade is to play in your favor. It's totally up to you as a trader what you want to do. If you want to have super tight stops, don't expect to have a high win rate, and vice versa. If you have wider stops and smaller targets, you could probably expect to have a bigger win rate, but less profits overall per trade. So each time frame is important for different reasons. Like I said, every style is different, but it's important that you know how to use every single one accordingly. Now, if you're a beginner, I want to highly recommend avoiding trading the 1 minute and the 5-minute time frames. There's a lot of noise on these time frames, but you also see a lot of opportunity day by day, right? If you get stuck on the 1 minute, you're gonna notice that a lot of structure doesn't hold well. In hindsight, it holds well, but trusting structure as it develops is very difficult on the lower time frames. If you want to see more consistency as a beginner and the strategy that you learned is not gelling with you well in terms of smart money or supply and demand, I highly recommend trading off the 1 hour. This is where you'll see stronger supply and demand areas hold. You'll see easier entries day by day, right? You'll be less likely to get stopped out on the higher time frames if you trade them accordingly. I know this was something that I had trouble with in the beginning of my journey. I was always trying to get high risk to reward trades on like 1 or 2 pairs day by day. There were weeks where I found consistency and weeks where I didn't have as much consistency. But for the most part, I've noticed that for beginners, you'll see a lot more progress if you do focus on the higher time frames. Like I said, structure just holds better and trades take a little bit longer to play out. So you have more opportunity to react to what price is doing, and if it goes against you, you have an opportunity to get out before your full stop gets hit, possibly. This was a short and sweet one, guys. I hope it helped you out a little bit. Anybody that's new and learning, I hope that you could take something away from this. If this video provided you with some value, please drop a comment, like, share. It really helps my channel out a lot. If any of you are looking for some free resources, I do have a free ebook in my link tree in the description that you can download free of charge, as well as a free Telegram group that is open to the public. It's not a Telegram group where you just view what's being said. You can actually chat and interact with everybody in there, including myself. I will be offering my trade setups throughout the week in there for everybody to see. But once we hit 100 members, I'm gonna keep all of my signals exclusive to the Discord and shift most of my focus towards the guys in that group, as it is a mentorship, right? And if any of you are looking to solidify your knowledge in the markets in terms of smart money, learning about algorithmic theory, learning more about supply and demand and how you can refine your zones, definitely give our mentorship a look on the Discord. You can find all that information in the description below. Thank you very much for watching. Appreciate it, guys. Happy trading.